Okay, we're going to open it up to questions, and I'm sure all of you will have some great questions. We're going to ask for groups of questions at the same time. So just while you're thinking about that, two of the questions that I'm really interested in, but I'm going to ask all of you first, and hopefully you'll come up with the questions before Anil and Jens have to ask this. Of course, one of them is going to be, given that Professor Gertner's explained that we let these guys off the hook by not making any predictions, I do want to hear what their probabilities of either Finland or Greece not being in the euro by the end of the 2015, and maybe which one it is. And then the other question that I'm thinking about is, you know, there must be lots of people in the audience who are thinking, whether they're from Europe or from America or have moved here from Asia or lots of other places, we've heard some pretty bad news about Europe. It's a bit mixed, a little bit better in some cases than others, but where else in the world should we be thinking about in terms of where we might want to live, where we can go make some money, where we can get jobs, etc. Because, you know,
Canada.
It's easy enough. God's sake.
Yes. Come back to the Alumni Club of Canada, that's right. But let's hear some other questions from the audience before those two are addressed. And I'm going to take a couple at a time, so please continue to put your hands up.
Hi, I'm Tanya, and I'm 2008 class, and I took an class, understanding central bank, and I'm coming back to Union. I wanted to ask on the own thing, like you were saying, there will be a point when market becomes curious when it's going to be used. And I'm having a hard time like figuring what the point is. I think the Cyprus will be contained. And I don't think the SPD in Germany will have a huge argument about the bailouts because they are allegedly more supportive of it than the Merkel's party. So, and even after German elections, I don't see what the major trigger is. So it would be great if you give some thoughts on that. Thank you.
So, as you ask your question, maybe say what your name is and whether you're coming back to Reunion.
And if not, why not?
Next question. Yeah. Right here.
Hi. Ron Ray Chowdhury, MBA class of 08, and alum of Understanding Central Banks as well. Basically, my question was more to do with the LTRO fund repayments. It seems to me, well, you showed the charts where spreads have compressed for a lot of the banks to the point where their market funding is cheaper than the LTRO funding. So it makes economic sense for them to repay the LTRO funds, especially keeping in mind that the ECB rates are where they are. However, does it not create a situation where a lot of the weaker banks, because they don't want to be seen as the weaker banks, to avoid the reputational hazard, they would also be tempted into repaying their LTRO funds, even they probably shouldn't. And then what impact does this have in, I mean, does it potentially freeze up the credit markets again? And hence the impact on economic growth in the Eurozone and the Euro? Thank you.
We'll take one more and then maybe here in the front row. Please.
Peter, ESB 19, current EMBA Conho. My question is regarding the exchange rate between different countries, and also in Jens' forecast, whether or not he will consider, in terms of relation to euro, to other currency, for example, renminbi, and also US dollars. So I'm just wondering if panel can comment on that. Thank you.
Should we go? Those are three good ones there. So.
Why don't you kick off with that?
Okay, I'll take two.
Okay.
I'll try and leave you two.
I'll pick up the rest.
Okay. On OMT, I understand that the official position of the opposition in Germany is more pro-Europe than the incumbents. But did you ever think that Mitt Romney, having made all the money he did in business, would stand up on the stage with a straight face and say, you could tell if my policies are working because gas prices will be lower? Now, he knows without a doubt that that's utterly ridiculous. But when these guys go for elections, they'll say anything. And I think the German opposition is going to have to attack Merkel on stuff that probably is not very defensible. So I think there is a risk that in Germany, at some point during the elections, they'll start pressing to say, surely you can't defend all of these cases. And that's I still think a possibility. I think the other more conventional reasons of the OMT having to be used is, let's suppose something goes wrong in the Italian election and Berlusconi's back, and the thought of these bunga bunga parties sets everybody off. Mr. Rajoy, the Spanish prime minister, ends up getting indicted or ends up severely weakened and unable to carry through on reforms. I mean, I just think these countries with these astronomical unemployment rates are just one random shock away from lots of trouble breaking out. And at that point, the temptation is going to be for the politicians to go and say, I want to renegotiate, you know. 20 million people elected me. Who the hell elected, you know, the IMF to decide that we need more austerity? And they basically call the bluff of the ECB and the IMF to do whatever it takes and say, well, show us a little. So at some point, I think that logic will kick in if growth doesn't resume, and I don't see where the growth is going to come from. So, and my number for the 2015, I put it probably a little bit over 50% that either Finland will go out or one of the weak countries will drop. But just remember what I said about being totally wrong, because I think I was certainly on several calls with people where everybody on the call agreed that it was 80% that Greece was going to be out by the end of last year. So the propensity of the Greeks to suffer is remarkable.
Yep. So my odds are much lower than that. They're not zero, because zero is a silly number, but they're very low.
Epsilon?
Not epsilon. I would say more than a couple of epsilons, but certainly in single-digit percentages. On the OMT, on German politics, I think, if anything, the German opposition, the challenge they'll provide, and I think you're absolutely right, the notion that they're currently more pro-European in some way that's positive for all of us, I think that's certainly a challenge. But I think that the push that's going to come from, call me an optimist, is that they're going to say, let's have some more debt restructuring. Let's not provide aid to Cyprus without a proper debt restructuring. Let's not say it come to Spain or Italy, or say it comes to the introduction of common bonds at some point. Let's not do that without addressing the stock problem and without making sure that the private sector carries some of that burden. Now, that gives you more Europe, it gives you less systemic risk, but it's not a lot of fun for people who hold Spanish government bonds in those circumstances. On the OMT, I think the way into this, rather than wait for Rajoy to get his acts together, could be Ireland and Portugal. If you get Ireland and Portugal in, and you demonstrated it works, and you've shown you can do it, and that might be a good thing. On the LTRO, on the LTRO repayments, so far, my interpretation is that the repayments of funds have obviously put upward pressure on short-term money market rates, as you would kind of think is normal when things start normalizing. So rather than interest rates being pushed all the way down to the current deposit rate of 0, they are now edging higher towards the refinancing rate. So some sort of normalization, some sort of reduction in the excess amount of liquidity in the European system. In a way, that's a good thing, because it means that the refi rate, the main policy rate, becomes meaningful. You could lower that rate if you don't like rate increases. As macro, in the macro circumstance, you just lower that rate, and I think that could be the ECB's policy action. The stigma question, which is what you really asked about, is a tough one. I relied on there being a lot of European banks. You can't do what you can do in the UK, which is you can sort of count them all, and you can call them up and say, did you do this? Did you do that? And you can't do that in Europe, because the counterparts to the ECB and the participants in the LTROs are so many that it's difficult. So as long as they keep quiet about it, then I think it'll be okay. So I think actually a significant risk will only arise if they all feel obliged at some point to state upfront how much they've repaid, and that becomes sort of a manly test. I think the ECB will resist that very hard and stop it, and get the big banks to stop doing that. And I think there would be pressure for them to pick up liquidity if that was the outcome.
Do you have any views on exchange rates?
Views on the thank you. Views on the exchange rate. The euro has strengthened a lot together with that. Tightening of short-term rates that I talked about have both acted to have both signs of normalization of some kind in the euro area, are both signs of the risk premium attached to the euro area as a whole are being reduced. So it is a good thing, but obviously also means a tightening of monetary and financial conditions. I think the euro can strengthen a bit further. We're still in a situation where that risk premium is substantial. But at some point, the more conventional, which economy has got stronger demand outlook, will start kicking in again, and we'll see the euro area, the euro weaken a touch.
Okay. Back. We've got two back, then there's another one back in the back there.
Thanks. Thanks for the floor. So my name is Borislav. I am not an alum. Probably I will be in the future. That's why I'm here to check you guys out. But basically my question is directed to Mr. Larsen. You were pretty positive about the future and the outlook of the European Union. You've presented some really, credible options to the ECB. I think they're all, credible options, as they say, and as you said, and you pointed out. But my question is, would they be willing to do it? Because as we've seen lately, and this has been kind of the general problem of the European Union and the Eurozone and the ECB, there's not decisive action, and action is not taken quickly. The Fed stepped in straight away after the crisis. It pumped money in the US economy. It took the ECB 4 or 5 years to do something like that with the LTRO. So I was thinking, you have interactions as well firsthand with people from the ECB perhaps. So I was thinking how hard a political sale is such an extensive action taken from the ECB. Let me just direct your attention to like a recent case. The ECB is quite hesitant to helping Ireland, the best performer out of the pigs. Mm-hmm. So yeah, your look on that.
Thank you.
We'll take the one in the back first, and then this gentleman here.
Hi, I'm Rama Veeragu, a recent alum from the executive program. I've got a question about the interaction between the central bank interventions and the fiscal measures, especially for the so-called weaker European countries. And in particular, whether the incentives for those countries are almost reduced from a fiscal measure perspective when the spreads tighten because of the central bank's actions. So is there a danger that the weaker countries rely too much on the measures such as the LTRO to solve the problem, some of their problems?
And then right here, sir.
Hi, I'm Terence Amico, XBA team. Two questions actually. One is probably vocabulary. When does a long-term correction become a crisis? And then secondly, how do you force European banks who have taken LTRO to actually lend to companies within their jurisdiction to increase liquidity?
I think we should stop there for a second.
Yep.
With those.
Okay. So a lot of meat there. I think the ECB is willing to do it. I think the ECB, the attitude, I don't think you should underestimate the extent to which the change of personnel at the top of the ECB has mattered for the attitude. Individuals actually do really make a difference. And it's not just Draghi who has changed, it's also the people around him. And the attitude to the OMTs, the attitudes to more aggressive monetary policy easing has changed. There's a willingness to contemplate things that a year or two ago would have been would be looked at different. It is basically more of a central bank, and I think less of a political player. Trichet was more politically focused. Draghi is a central banker. They're not going to do it quickly. I don't think they're going to jump into a QE program just to prove they can do it. I think they would only do that in circumstances where the macroeconomic outlook in Europe is much worse than it is currently. But if you want, in the financial market sense, and thinking of the tail risk as being the thing we're really worried about, I think those tail risks are curtailed by the ECB's willingness to apply its balance sheet. I would say, I'll come back to Ireland in a second, that also goes to the issue about fiscal measures. Of course it's an issue, and it has certainly been a big issue in Europe in the past. The ECB has constantly felt that the fact that they were the responsible individual in the room, that they would always step up in case of a crisis, was exploited to the fullest by European politicians. And I don't think that has substantially changed. Yes, Berlusconi is currently not here. And the Spanish government has implemented many of the measures they have been asked to do, but under severe pressure. And the appetite for doing what is necessary is not strong. So I think absolutely that is a risk. That is why there will continue to be a desire to keep some fiscal some pressure in the form of some spreads. That's why you don't want to go back to the bad old days before the crisis, where Greek government bonds yielded, what was it, 8 basis points more than Germany. That's clearly bonkers, but that was nonetheless the case. On Ireland, I think ECB this is a tricky situation. Ireland has entered into a financial arrangement that's complicated, probably contravenes the no monetary financing clauses in the treaty, and are difficult to defend the way they're set up. What they're doing is shifting from one suboptimal arrangement to a different one, which is more sensible from their perspective. But the central bank cannot like either of them because they are very close to monetary financing. So I think the ECB has actually got a pretty good outcome today because the Irish did it, and the ECB didn't have to say that they liked it. So everyone gets what they want. Ireland gets a more affordable way of reducing that debt, effectively of recapitalizing the banks, effectively of accepting those losses. The ECB doesn't have to say they like it, and a problem is resolved. And I think that's actually a good outcome. You're right, it has taken a long time, but it is because the ECB cannot sit there and say, monetary financing, never mind. You can't do that.
Okay. So I agree on the change of leadership at the ECB being absolutely critical. I mean, most of the members of the executive board are people I know and have known for a long time, and they are committed to doing what it takes. So much so that I think you can reasonably say that Mr. Draghi is a little bit pregnant. I mean, when you say, I will do whatever it takes and it's going to work, if he actually has to start doing stuff, how is he possibly going to stop? I think this has been remarkable that it's gone so far. I have no doubt that when push comes to shove, they will try to keep it together. But then whether or not people will say, okay, this is what I signed up for, and everything will be hunky-dory for years to come, I think is a very much open question. I think the question about the fiscal actions and the central bank interventions is exactly just a different way of stating my point about there's no credible way to get the promises in Spain and Italy to be maintained no matter what. And that's why this game of chicken, where you let the spreads rise for a little bit before you tamp them down, was there. It's pretty clear that the ECB was happy to throw Berlusconi under the bus and let those spreads rise precisely to get rid of him. Whether they would play that game again, I don't know, but I think the political uncertainty here is huge. It's not like the economics of this are very complicated. It's just getting an agreement, and they don't have a consensus on what to do. On the getting the LTROs to pass through, I haven't studied the funding for lending scheme that they've got here enough to decide whether it's actually working. My casual thing is it hasn't done so much, but if people become convinced that is a success, you could imagine everybody else rolling it out. they have some clever things to try to prevent arbitrage of relabeling things. So maybe that's good because they aren't just moving money from one pocket to another, but that also has probably made the take-up a little bit less than maybe some people were expecting.
If I got, on the funding for lending scheme, I think it is it's a smart move. I think it's a more effective move than QE, and it'll increase the size of the Bank of England's balance sheet much less than gilt purchases. The problem is, as you say, how do you make sure that the funding you're giving to the banks don't just end up being mortgage lending to people with very low loan-to-value ratios? I mean, that's not that wasn't really the point. The point was to expand the credit supply rather than just have a price effect. But you really want to have a quantity effect, and the jury is very clearly still out on that. The Bank of England will declare this policy a success, whatever happens. That's for sure. But I think the point is really you don't have effective tools to force the banks to lend. I mean, this is the problem of macroprudential policy. Yeah. You can imagine ways of stopping banks from doing stuff. You can raise liquidity ratios. You can raise sexual capital requirements on different bits of, and say you can't lend that much to housing, or it'll cost you more in capital terms to lend more to housing. But if the banks don't want to lend, then however much you lower the capital requirements, however much you improve the liquidity situation, they're not going to lend. And I think this is the situation certainly Britain has been in so far. This is almost surely the situation we're in Europe.
Did we get when a long-term correction becomes a crisis?
Oh,
I don't know.
I think we've been there already, and okay. Come back, and I think Anil is right. We'll get there. We'll get there again.
Some more questions? One gentleman here, the lady back there, and the third person back. Well, we'll take those 4 questions we saw the hands for as one group right now.
Okay. Go ahead. Sal Casadillo, alum, student of Professor Cashel. Used to have some heated debate whether fiscal policy, irresponsible fiscal policy of Italy, but now I see that spreading around the world. So, it's kind of funny. No, my question is more of a general question, is about the consequences of this unconventional expansion of the balance sheet of central banks. I'm really curious because when I took your course, this was probably could have been classified as kind of really unconventional monetary tool. Probably we didn't even study that. So I understand that central banks essentially have put a patch on the crisis that postpones some more real adjustments. But what is not clear to me, I would like to understand, what are the potential systemic risks that we are essentially taking on in the system. Maybe we're not seeing the risk right now, but maybe some years down the road. Just want to understand from your perspective what kind of risk we're taking on.
Systemic risk. We've got 2 questions at the front here.
Irina Somerton, Institute of Historical Research, University of London, and an alum of UCLA in California. No, Chicago, sorry.
Got that.
Are you going to your reunion?
Yeah, you can come to our reunion.
And by the way, I'm doing a book on the European Union and the Euro, and I'm a fundamental pessimist about the Euro, and so I wanted to raise a back to fundamentals point. The Euro is, I believe, and I'm in a big group of people who believe the same thing, that it is a fundamentally flawed project. It can't last. It can't last without real political union. And the EU ruling elite, continues to tinker around the edges and pretend that they're moving towards a federation, but they're not going to have a full federation. And I think it's a hopeless project. It's just a matter of when, not if. It's all going to fall apart. Sorry.
Hi, Nishit Shah, future alumni, probably in 2017 or something. Just to take a step back, right now, I mean, the growth in Brazil is kind of well documented. The growth in Latin America is something being talked about. the growth in African countries, I mean, I was reading an article, I'm not 100% sure of the accuracy, but some of the African countries are the fastest growing in the world in the last year. And the growth in the Asian giants like India and China is fairly well documented, so is Russia, which basically means about 4 billion of the 6.5 billion people on planet Earth are going through rapid globalization. We have the chief economist from some of the leading banks. So do you think it has the potential to kind of take the rest of the G7 or G8 out of the current crises they are in? Thanks.
No.
Then we had one more question in the back there.
Ivor Tucker. I'm not an alum, but I've been to several of these events and find them really stimulating. So thank you for that anyway. The question, I suppose, partly follows on from the lady over there, that I think there are fundamental issues in the whole Euro project where you've got political issues that will never converge, and you're trying to shove economics into that. But I think the political capital that's invested in the Euro project is so overwhelmingly strong that the political elite will really do anything not to, or to avoid breakup. So is the reality of this just means that we're going to go from one minor or major crisis to the next and actually never ever get this resolved, because fundamentally you just can't put a square peg in a round hole?
Let me go first this time. Okay, so let's take the two questions on the euro together. Obviously, with the political union, this thing would be very, very, very different. But I share the skepticism over getting to a full political union. I don't think it's unreasonable to think that there could be two currencies within a free trade area that would serve the populations of both the North and the South much better. Fundamentally, if there was an arrangement where the Italians, the Spanish, maybe even the French were saddled with a different currency that was weaker, that had a little bit higher inflation, carried more interest rate risk, and was not a weapon that could be held over the Germans' heads, I think things would function better. And it's not inconceivable that we could get to something like that and still keep the free movement of people and the openness for trade present. You'd give back some of the gains. I mean, the bond markets of both the strong and the weak bloc would be reduced. If you did this, you'd want the junk currency to still be called the euro. That's the way to minimize the legal costs. But I think you could get to something like that if things go badly enough. And I think that's close enough for the elites to declare victory and then for the capital markets to attack Japan. So I think that kind of thing could happen. On the question about the large balance sheets, the exit strategy for let's take the Fed, they've probably spoken about this a little bit more than everybody else. It's pretty straightforward. They'll pay interest rates, they'll pay interest on reserves, and they'll just have to raise that. They have to raise it fast enough so that all these excess reserves don't turn into loans or flood back into the economy. The growth between narrow and broad money has diverged massively, and as long as the broad money is not growing very quickly, I think you can be safe and not fearing hyperinflation or anything else. So the technical problems aren't very big. There may be a political economy headline risk for the Fed taking losses on its portfolio. I find it a little strange that they committed to sell off all the non-treasury securities and stated that they were going to try to do this pretty aggressively. You can go find the FOMC statement on that, I think in June of 2011 or 12, I don't remember, but the FOMC said something that almost locks them in, if they follow it, to being sure to take some capital losses. But big deal, the government as a whole will still be making whatever it's making, and that's not an economic problem, but it's a political one. And then finally, on the globalization, you know, it's a nice story, but there's no chance that the emerging economies are going to pull the G10 along. Just remember when you go to China, if you go outside of Beijing, how poor a place that is. They're going to need to be investing for generations, a couple of them, to catch up. And so they can grow, but the the spillovers to everybody else are, I think, much more modest than we appreciate. Just remember, Japan was the U.S.'s biggest trading partner when the crisis in Japan started 20 years ago. They've been in the toilet for 20 years, and it still didn't take down the U.S. economy in any meaningful way. It's gone so badly that they're now not the biggest trading partner anymore. But I think for the large countries of the Euro area and the U.S., there's just not that much openness. There's a lot of trade within Europe, of course, and the UK is much more susceptible to this. But we're not going to be able to get bailed out by globalization. It's going to take real reforms.
If I may start with the balance sheets, one of the last things I was involved in when I was at the bank was designing an exit strategy for the asset from the asset purchases. And I mean, the way Anil described it was pretty much the way the bank would do it, and it's still pretty much the way the bank would do it. That exit itself is not the trick. The trick is you are going to end up in a situation where the incentives to keep policy expansion for too long are very strong. You'll end up with misallocation of capital. You will end up with higher growth in credit than you really should accept. You will end up with that money multiplier suddenly going much higher, and you will end up having to pull everything back quite quickly. And when you have to do something quickly, interest rates could go up very sharply. You might end up with another crash. So I think it's quite tricky. That's why it's good. They now got all these tools they can pull. Capital, and they're going to pull capital, and they're going to pull liquidity, and all sorts of things that make it much easier to try to, in addition to the normal macro tools, to try to control credit growth. Whether it's going to work, I'm not so sure, but at least the tools are there. On the euro, the euro issue, yes, I agree that it's not the optimal solution. But the question is not what the optimal solution is. The question is where we are, and what are the options, and where can we go without the world ending. Transaction cost is a Chicago thing, right? Transaction cost economics is a Chicago thing. Think of the cost of changing from the current arrangement to one of the clever arrangements that Anil has dreamt up. They are enormous, and it's all very, very complicated. And the thing I'd say is I can find many things that you would find are not optimal or not sustainable, and they're still there. Belgium, for God's sake, is unsustainable. It's as a political construct, it doesn't make any sense. But it's still there, and I suspect that the probability of it not being there in 10 years' time is very, very low. I hope I got that right. On the notion, Anil is of course right that the world is not going to pull us out. I think in a demand sense, in a cyclical sense, a recovery in emerging markets would be tremendously powerful. Africa is unfortunately not important enough yet. But in the structural problems are there, the stock problems, the debt overhang, and all that. We can only address those ourselves.
Okay, gentlemen, thank you very much. I feel like we should maybe have a vote of what the audience feels about who's right between Jens and Anil, but there's too many of Anil's students in the room to make it fair to Jens. I don't think we should
vote. It's Chicago, and they get to vote twice.
So with that, I'll hand it over back to Professor Gertner to wrap up for us.
Well, I just want to close the formal part of this incredibly stimulating evening by making a couple of thank yous. First, I'd like to thank Deutsche Bank for their generous sponsorship of this evening. Thank you. And then, of course, I'd like to thank all our panelists, Bruce, Jens, and Anil, for maybe agreeing a little bit too much, but nonetheless providing us with an incredibly large number of things to think about. And thank you. And please join us for a reception outside either door. Thank you.
Thank you.